topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome. Hope everybody had a great weekend and a great week last week. We're back here talking trucking and taxes. I write an article for OOIDA, Owner Operator Independent Drivers Association, Media Landline magazine, which if you're a trucker and a member of OOIDA, you get this magazine. So always look for our articles in that magazine. We lay out, different things that just apply to trucking owner operators. How to save yourself money, especially, on taxes. Taxes get extremely expensive. And I don't know, it doesn't matter whether you're an owner or operator, whether you're running a small business, you're self-employed, whether your business is a growing business. Taxes can be the one thing that can drive that nail into the coffin because you're not prepared for those taxes. Now, what do I mean not prepared for those taxes? Well, most people starting out in business don't want to spend the money to do tax planning. Prepare for the inevitable. What is it going to cost you tax-wise when you're running a business? Now, right off the bat, owner-operators and everything, your net income, small business, self-employed, your net income, if you're just a DBA or single member LLC with no other planning, you're going to get hit right off the top at 15.3%. Whoa, wait, why is that? Well, see, you're self-employed, you get hit with self-employment tax, Social Security, and Medicare, both sides. Yeah, when you're a W-2, it's really, really nice because, hey, most people after your first paycheck don't even really pay attention to what taxes are coming out of their check. It becomes second nature. Why do you think the government has employers pulling taxes out of your check? So you don't feel the pain of actually having to write a check and send it into the government every quarter. And then people wouldn't do it, and then everybody would be owing money, and our other company, Taxation Solutions, Tax Relief, would be inundated with people who are having to solve tax problems. We get a lot of it as it is, and if you do have a tax problem, don't forget to give us a call at 888-930-1016. Again, 888-930-1016. But don't forget to mention you heard it right here on Tax Talk for You for special discounts and promotions that we're running periodically for listeners here at Tax Talk for You. But, you're getting hit with that self-employment tax. It's 12.4% for Social Security and 2.9% for Medicare. Now, that means basically if you made and netted $100,000 from your business, you're paying $15,300 right off the top. Bam, it's gone. So now you didn't make $100,000, you're now down to $84,700. Then you get slammed again for federal and state income taxes. And if, your husband or wife is making money, that tax bracket could be, up to 22%. It could be 37%. But man, there goes my net profit. There goes my cash flow. And then you've got to make quarterly estimated tax payments. And those aren't fun. So those are required if you expect to owe more than $1,000 in tax. If you're below that, then you don't have to make them. Estimated tax payments are due quarterly. It's due April 15th, June 15th, September 15th, and then again January 15th of the next year. So, you've got to make those estimated tax payments. And then it becomes burdensome as a business owner. And when you're driving a truck and you're out there going cross country and you're over the road and you're away from home, what's the last thing anybody ever wants to do? Bookkeeping, figure out what my tax burden may be, pay my quarterly estimates. Oh, don't forget, I'm an owner operator. I've got the heavy highway vehicle use tax. Did you file your 2290 annually? Oh my gosh, we also have IFTA, fuel taxes. Hey, all these things are what come down and just hit you as an owner operator. And when you're not prepared for it, it's really, really tough in this business. And that's why, Taxation Solutions Tax Relief has worked with truckers since day one. I hear a lot of other companies out there going, oh, now we're into helping truckers. Well, we've been doing this since day one that, taxationsolutions.net tax relief has been, solving tax problems. We started solving tax problems for truckers many, many years ago. And we've, been in business close to 20 years now, helping truckers, across the country fight and solve tax problems. Hey, speaking of across the country, this evening I'm heading out to Baltimore. I've got a client out there that, they've been in really deep tax troubles. And now the revenue officer wants to do a site visit at, their business. So I'm heading out there to kind of babysit and hold the hand of the revenue officer. It's not very often that revenue officers want to get out and see the business and stuff like that. In this case, they do. We're fighting this revenue officer tooth and nail to set up a reasonable payment plan for the client, and having to fight the revenue officer every step of the way. But that's our job. When you hire Taxation Solutions Tax Relief, we're the ones that step in between you and the IRS to solve the tax problems once and for all, to put this thing to bed so that you can get back to living your life and not looking over your shoulder. In this case, I've got to go out there and travel and do this for our client so that, they can feel better and not have to worry about what this revenue officer is doing. This doesn't happen very often. I haven't seen it very often that they're going out to do site visit. This guy's actually taking his manager's manager. So I guess that's 2 levels up from him. So it's kind of interesting. We'll see what happens. Be there, a couple of days and get this done and over with and move on and get back here to doing taxes for truckers and all of our other clients and trying to get all this stuff done on a timely basis. Hey, don't forget, if you've got an S corp, even a partnership, get your extension filed today. Today is the last day to file your extensions. So get those extensions in ASAP today. Don't miss it, because the penalties can be great against you for your business. So if you're an S corp partnership, get those extensions in and get them filed. Don't delay. So there's your PSA announcement for the day. Get those extensions filed. Your personal extension doesn't have to be filed until April 15th. And just remember, any extension filing dates, if there's money due, it's only an extension of time to file, not an extension of time to pay. So you're always going to want to make sure that if you're going to be owing money, make sure you get it paid in before the filing deadlines. So now, what are we trying to do? We are trying to save money on taxes. Now, how do you save money on taxes? You find tax deductions. You find every tax deduction that's available to you as an owner-operator, as a small business person, as any person running a business that's going to be smart and looking for opportunities to reduce taxes to the lowest amount allowed by law. And in trucking, as an owner-operator, there are some critical deductions that can lower and do lower your tax bills. And we're going to go through those right after this short break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Before we get into critical deductions for lowering your tax bill as an owner or operator, small business person, had a question that came in from Joey. He owes $35,000 to the IRS, has 2 years of unfiled tax returns. What can Taxation Solutions Tax Relief do for me? Well, first off, give us a call. We're going to go through and do an analysis. It's a free call, free consultation. Matter of fact, mention Tax Talk for You, and we'll get you some special discounts. But give us a call at 888-930-1016. Again, 888-930-1016. In most cases, you have several ways we can go about to resolve the tax issue. Yeah, you can call the IRS or just set you on a payment plan, and hey, you can go from there. That's what you're going to get when you call them. But when you call us, we're going to go through and do an analysis with you. We may decide that we need to do a tax analysis to pull all the records and everything for you so that we can figure out everything that needs to be done and what needs to be done. But it may be a installment agreement, something you can afford. It could be non-collectible status, depending on how much money you're making. And Joey, we don't know any of your criteria out there and stuff. So, giving us a call is what's really going to help us help you. You might qualify for what we would call the Holy Grail out there. Everybody wants the pipe dream, offer and compromise. If you qualify for it, then we can go for that. And sometimes it's better to be into maybe a partial pay installment agreement where you pay far less, but it doesn't come with the strings attached that could have all the debt flowing back because you messed up somewhere in one of your filings or ended up still owing money on something and the debt comes flowing back. So give our office a call, 888-930-1016, mention Tax Talk for You, so that we can get you the special discounts and stuff. And let us talk about what we can possibly do to solve your tax problem with the IRS. And maybe we can just fix it and it would all go away as well, because there could be some other underlying issues out there that'll give us the ability to fix it and go forward from there. So back to owner operator small businesses, what are those critical deductions? Now, something unique, because you're a 1099 over the road trucker, self-employed, and you're going to pay taxes on the net profit after your expenses. Here's some that you're going to be looking for. Now, this one applies to just over the road truckers, per diems. Yeah, you as an over the road trucker can deduct $80 a day for per diems. So this is the nights away from your home. This covers meals and incidental expenses while you're away from your tax home overnight. And then you get 80% of it. Now, there's exceptions here. The first day and last day only count as half days. So those are $40. The days in between the first and last are $80. So you can get this deduction. It's a great deduction, even if it's only 80%. So they're giving you this as a deduction for meals while you're on the road and away from your tax home. Now, if you don't have a tax home, guess what? Your truck is like your tax turtle. You live in your shell. You don't get per diems. So you have to have a tax home, someplace you call home, someplace you're paying to maintain your residence at, even if it's just renting a place. So, if you're staying with family or something like that, and you have a place there that you can rent, pay them rent. That becomes your tax home. And you get this great deduction at $80 a day for meals and incidental costs. Okay, so as a trucker, you've got a tractor and trailer. And unlike passenger cars, you have to use the actual expense method rather than standard mileage. Okay, I have seen this. I've seen this on returns where preparers take your mileage and put standard mileage in for your tractor. That does not work. You have to take actual expenses. Now, you drive a passenger car around for business, you can deduct those miles as well. Keep a mileage log. So those are the ones, your passenger car, that is what you're going to take actual mileage on for the mileage that you do for business. Your tractor, you're not going to take the standard mileage. You're going to take actual expenses. That includes fuel, DEF, tires, repairs, insurance, truck washes. Those things are all going to be included. Your normal maintenance, oil changes. So all those things that you're going to incur on your truck in the actual expense method is what you're going to take on your truck. So don't miss all those expenses. make sure you're getting all the expenses that are out there. So something else you're going to take, because your tractor and your trailer are in the business, you're going to depreciate them, or maybe take Section 179 or bonus depreciation. So this is where you recover the cost of your truck over a period of time. In some cases, you deduct the full purchase price in the first year it's put into service using Section 179. Now, there's a drawback to it, because I've seen people, and man, you take more bonus or Section 179 depreciation in year one, and it's put you into a very, very low tax bracket. And now you're wasting depreciation that you could have maybe depreciated this truck over 3 years and taking full advantage of the depreciation over the period of time at a higher tax rate than where you are today. Now, that doesn't mean, hey, you shouldn't do it across the board. It just means you really got to look at, hey, where am I at in my tax bracket? So am I in a 10% tax bracket or less, or am I in the marginal tax rate of 22 or 27 or whatever, 37%? We really got to look at it, because we don't want to waste that depreciation in year one and then not have any in the future years. So we had a client also who insisted we needed to take full depreciation to lower their taxes down in year one, because they sold the existing truck they had, and because it was fully depreciated, there was a profit on that truck, and you're not allowed to do a 1031 exchange on said trucks, and therefore you had gains that were being taxed, because everything they got paid for the truck was all profit, because it had no basis. It had been fully depreciated, and then they were going to owe more in taxes. So they therefore wanted to do full depreciation on that truck, and then had no depreciation coming forward. And therefore they were now paying more in taxes at the higher tax rate than where they were to begin with. So kind of got to watch that. You really want to take the time to make the decision, and make the correct decision is, how much is this going to save me? What is it going to cost me in the future? So we need to weigh out both today, tomorrow, and the next year to make sure that, one, you're claiming the amount of depreciation you need, but not claiming too much depreciation that'll set you back many years the next year. So we kind of look at it both ways. Hey, we're coming up on a break here, and we're going to take a quick break, and then we're going to go into talking about other work costs, because what are we trying to do? Lower the net profit to decrease the taxes you're going to pay on your business. Now, these go across the board for any business, and today we're talking about truckers and taxes, and what can we do to save truckers money. And we can do that also at truckertaxtools.com. And when you do call Trucker Tax Tools at 877-966-2477, again, 877-966-2477, mention Tax Talk for you, and then we'll give you some great discounts. We're going to be back talking about other work costs right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for you. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Well, we're finding that you've got to find every cost and deduction possible to save yourself on taxes. Now, in our next section, after we get done talking about costs and everything else, we're going to start talking about how your entity is set up, whether you're DBA, LLC, Inc., and then your tax status, whether it's a partnership, S Corp, and things like that that can help you save money as well. But we're looking for other costs. So do you do advertising? Do you do marketing? Deductible business expenses. Do you make charitable contributions? Well, did you know that charitable contributions are not a deduction for your business, but would be a deduction on Schedule A if you itemize? And for 2026, there's going to be a above the line deduction before or addition to the standard deduction for charitable contributions. But charitable contributions don't affect the bottom line of your business. But you see these buts here? Yeah. If you're doing marketing and supporting the charity, those marketing expenses are deductible. So maybe you're promoting your trucking business. You're trying to hire more truckers and you want to do it with your church, and they're having a bazaar or something going on a fair, and you want to advertise, maybe put a banner up, get them to put a banner up for you. Marketing expense, advertising expense, as opposed to charitable contribution. There's ways to make other things work. Supporting maybe a golf tournament. And again, you're getting them to put a sign up. You're now maybe doing a sponsorship, but you're doing marketing, not a charitable contribution. There's other ways to look at it. Dues and subscriptions. Yeah, your association dues. So if you belong to OIDA, maybe Arizona Trucking Association or Texas Trucking Association or one of the other state trucking associations or American Trucking Association, those dues are tax deductible. Now, we're also talking about subscriptions. Subscriptions you use in the truck. So you got your GPS. You got to subscribe and keep that up to date. Deductible. Other tools you're using via maybe your phone, and you got subscriptions on your phone that you use while you're in the truck, can be deductible. So you're going to make those deductions so that you can save yourself money. Now people go, is it really worth doing? Little things add up. I mean, you think about it, just using self-employment tax, 15.3%. You find a $100 deduction, you just put $15 back into your pocket. And you spent the $100 anyway. So why not get it to where it is deductible? So that's what we're always looking for, is items that you don't deduct that you should be deducting to lower that net profit from your business, to lower the impact of self-employment taxes, and then lower the impact of federal and state income taxes. So it becomes really critical what we're looking for and how we find it and where we put it. Interest. Now, when you're buying your vehicle and it's financed, principal is not deducted. Only the interest portion is deducted. We will amortize your loans or your capital leases to make sure that you're getting the interest portion expense written off on your taxes as well, which will lower your net income out there. Now remember, your principal part of that payment is not deductible, only the interest portion that you're paying. CB radios, that is a tax deductible. You add your CB radio into your truck, maybe you replace it or you put the antennas on. Those are all tax deductible. Your ELD, as much as people hate them, there's a tax write-off. It's another tax deduction. Your CDL fees, there's a tax deduction. Medical expenses. Okay, so family medical, I mean, unless you're doing some really sophisticated health reimbursement accounts and stuff, which we've got to work out with you, you could have a lot more deductibility for medical expenses. But as an owner operator, and you're the only one, your medical expenses are not deductible for the business, with the exception of your DOT physical. That is required, so therefore you're able to take that deduction. Tools. The tools you use, supplies you need for your truck or trailer are 100% deductible. So sometimes you need small tools because you work on your own engine or you work on your trailer. Those tools are, you guessed it, tax deductible expenses. Supplies. So you need supplies, in your tractor. Maybe you need a new bed, maybe you need a microwave, maybe you need a coffee maker, maybe it's a hot plate. All these little supplies can be deducted and expensed for the business. New sheets, the whole works. It's about setting your truck up for you to be able to work in it. We've seen even where people have replaced their driver's seat. That is a tax deductible expense. Depending on how much it is, we may have to capitalize it, but then we get to depreciate it, which all will work out the same. Safety gear. If you have specialized safety gear, that can be deductible. Uniforms, deductible. All right, your shirt doesn't have your logo on it that you could wear anywhere else. No, sorry, that's not deductible. If you're wearing jeans and you can wear jeans out to doing anything else, those are not deductible. That's just everyday wear. So we're looking for things that are deductible. A lot of times people miss telephone. Yeah, it's my personal cell phone. Yeah, but you're using it for business. What percentage are you using it for business? Is it 50-50? Oh, my wife and kids are on the same plan. Okay, how much is your expense for your phone? Okay, it is $60 or $50 a month. Well, $50 a month is $600. That is a great deduction. And, that $90, it just saved you in taxes. So that works. So we're going to be looking for those deductions so that you can get them. Ad valorem taxes, heavy highway tax, your IFTA tax. These are all deductible for the business and come off the bottom line. So you're going to be looking for those deductions that you can find so that you're not missing any specialized deduction for the business and you're not paying more money in taxes than you should. That goes for the ad valorem tax, If you're hit with property taxes over equipment, those would be deductible as well for the business. So, you're always looking. We're looking. When truckertaxtools.com, again, truckertaxtools.com, if you want to search our website up. We work exclusively with truckers. Man, we know you're the backbone of business. And we know when you get home, the last thing you want to do is do bookkeeping. And that's where we come in. Many of you have heard of, Taylor Barker, who sings at a lot of the different truck shows and stuff out there. A great friend of ours. And, we've talked to him all the time about helping to save money on taxes and get bookkeeping and making sure that we're dotting the I's and crossing the T's. Same with Brad James, who used to sing at the truck shows. We get him on Facebook every now and then singing, so it's really kind of cool and nostalgic. But he's out there hoofing and trying to make money in the trucking business and working a lot more. And, he doesn't want to spend time either doing bookkeeping or taxes for his business. The 10 clients that called us last week that became clients because the last thing they want to do is go home and sit and then start doing bookkeeping or preparing for their taxes. So they've brought their bookkeeping and tax stuff to us. And, a few weeks from now, they'll give us permission to get out there and mention their names as well. Adrian with Stork and Spartan Solutions. He's been hiring drivers and moving on and keeping business growing and done a great job at it. And we work with them on their bookkeeping. And as we have told them, we will concentrate on keeping your books as up to date as possible so that you have the information to run by. And then we'll find ways to reduce those taxes to the lowest amount allowed by law. And that's what we get to do, and that's the fun part. But it starts with calling us at Trucker Tax Tools at 877-996-2477. Again, it's 877-996-2477. Give us a call today or go to truckertaxtools.com and you can submit a contact page there. And just when you call in, mention Tax Talk for you, and we'll get you some special discounts as well. And we're going to take a short break, and then we will come back and talk about how entities will affect your taxes and how it can save you money. And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for you. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for you with more Tax Talk. Once again, here's your host, Barry G. Fowler.
And let's make sure we got that phone number right, 877-966-2477. Again, 877-966-2477. Give us a call at Trucker Tax Tools. Check us out on the website at truckertaxtools.com. And when you do call or we talk to you from the contact page, be sure to mention you heard us here at Tax Talk for you. And by the way, if you've missed one of our shows, you can go to taxtalkforyou.com. Again, that's Tax Talk, the number 4, the letter U.com. And you can hear any of our podcasts out there. We got to get caught up on a couple of the past podcasts, but we'll get them put up as soon as possible here today, as well as this show. So if you missed something, or maybe you had to stop and move to something else, or maybe you were getting loaded in your truck and you missed something, we'll make sure that this podcast is up there as well. Then go back and look at some of our other podcasts about trucking and taxes. Entities. We get this question all the time, and matter of fact, we get a lot of referrals from trucking associations when they're talking to their truckers and they have questions about what kind of entity should I be. But the easiest way, and we've talked to a lot of different attorneys about this, the easiest thing is to form an LLC. Because when you form an LLC, you start off generally as a single member LLC. And when a single member LLC files taxes, the IRS, when you file your SS4, which is for your employer identification number for that business, they will assign you how to file, which is generally Schedule C, meaning it's the same as a DBA. It's basically reporting everything on your own personal taxes. Okay, that's fine. Then we have flexibility. Now, if you sign up and you go and you form a Inc., so if we're gonna run a business out there and you incorporate it, when the IRS sends you that EIN letter, they tell you you've got to file an 1120. That's a corporate tax return. That means when you file that, the net income is taxed at the business level, and then distributions from the business is taxed as dividends on your personal level. Double taxation. See, you're distributing after-tax dollars to yourself. So we don't want that to happen. If you did make the election to be incorporated and you have Widget Transportation Inc., and they did assign you 1120, you can make the election to become an S Corp by filing Form 2553, making a disregarded entity, and therefore becoming a S corporation out there for your business. Now, once you become an S corp, now you've got to have a reasonable salary for the owner working in the business, which means you got to be on what? Payroll. So you just added a bunch of complications to your life right off the bat. Now, if you file your SS4 and you check you're going to have employees, guess what? It doesn't matter whether you are a single member LLC filing as a Schedule C, or whether you're an Inc. and you're going to be doing and made the election for the SS4 for S Corp and filed the 2553. Now all of a sudden you've got payroll tax returns due as well. So you got to watch how you file, and above all, read that EIN letter to know what are all the requirements. Apologize there. So you need to know all the requirements of filing and everything that you have gotten for your business. Now, so you elected to become an LLC. Widget Transportation LLC. It's a limited liability company. If you want to talk about liability limits and stuff like that, the best person to call is your attorney and talk to them about, what liability protection that this company has for you. And I will be the first to tell you, if you're looking at having liability protection in an LLC or an Inc., first and foremost is do not commingle business and personal. That means, no, you're not writing checks out of your business account directly to your mortgage company, or paying your grocery bills, or getting your nails done, or your hair cut, all these little things that you see that continue to run through here and paying your personal medical expenses and so forth are not allowed. That breaks what the lawyers tell me is called the corporate veil. You've now become one and the same with the business. So you're not going to save yourself on the liability side by doing that. Now, we got that clear. Now, you form this LLC, you're going to be taxed on Schedule C. So it's like being a DBA, self-employment, and you're going to get hit with that 15.3% tax. Yep, you're right. You are. Bottom line, net income, 15.3 right off the top. How do we solve that problem? Well, this first year, you may not have that problem, your first year in business, because you may have enough depreciation to get you down into a low tax bracket, or maybe get rid of most self-employment at all. Maybe your first year, you're not as profitable. So we may not need all that depreciation, and you definitely don't need the headache. Now, maybe year two, you're going to have less depreciation. You're going to be working more. You're actually going to be working hard at this all year long versus a period of time between the time you set up the company, got your truck and trailer, and then moved over to either getting my own authority, or you moved on to being leased on to somebody else. Now, what you're doing is looking for ways to do this. Now we can make that S Corp election. So make the election to now become an S Corp to save yourself money on taxes, so that, only thing taxable for Social Security and Medicare will be the reasonable wages you will make as an S Corp owner and operator working in the business. So you're going to be the owner of the company. You're going to be the operator of the truck. So therefore, you need a reasonable salary for operating that truck, pay your payroll taxes, pay your federal income tax, have that taken out. You might even pour more money into the wages that will go to offset your estimated tax payments. So you have that as an opportunity as well. But it's all about tax savings. And so now we move the tax burden from self-employment to only taxes on what's going to be in your salary. What's going to be taxed on your W-2s. You're going to get a W-2. At the end of the year, you're going to get a K-1. So the net profit from the business is only going to be subject to federal and state income tax, not self-employment tax, as long as you've paid the reasonable wages. So keep those things in mind. There are a lot of ways to save yourself money on taxes. And that's what Trucker Tax Tools does. So again, give Trucker Tax Tools, give us a call at 877-966-2477. Again, 877-966-2477. Mention that you heard it here on Tax Talk for You. Hey, time flies when we're having fun. I always tell you, go over to taxtalk4u.com. That's tax talk, the number 4, the letter u.com. Follow us over there. Follow us on Facebook. Follow Trucker Tax Tools and Taxation Solutions Tax Relief, and then never miss an episode. But if by chance you can't be here Mondays, 10 a.m. Eastern time, definitely go find our podcast over at taxtalk4u.com. If you find us there, you can never miss an episode. But we're going to be here every Monday at 10 a.m. Eastern time on W4CY Radio. And man, if you're following us and you get to hear this, great. If you missed something during the show, go find our podcast. Our podcast, iHeart, Spotify, Spreaker, you name any of the podcast sites that we're pretty much out there. So you can find us, but never miss it. And when you do miss something during the show, maybe you had to take a break, get a cup of coffee, and you missed something really good, hey, find the podcast over there and go and listen to us while you're in the truck, while you're at home, wherever you may be, we're available. Hey, above all this week, have a God-blessed and glorious week. Safe travels. And if you're in Baltimore, maybe we'll see you there. Have a great week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at TaxTalkForYou.com. See you next week at W4CY.com.